very good evening. You're watching the India Development Debate and I'm Tamanna Inamdar speaking to you on a day of utter chaos. In fact, in a sense, it was a day of seas in the market. The fears of crude plummeting, crude coronavirus and a lack of confidence in credit. That reflected in the Indian markets, it's reflected in the global markets. The words to describe it really have run short. Call it a carnage, call it a bloodbath on Dalal Street. Now we're seeing it on the Dow Jones. Dow Jones, in fact, at 6% on open, had to suspend trade for 15 minutes before going on again, still about 6% weak. So let's look at the big picture here. What is roiling the markets right now? One is coronavirus. The confirmed cases of which in India has now touched 45, but here we're relatively okay compared to the rest of the world. There haven't been any deaths yet. The other is the collapse of crude. So on the 6th of March, the collapse of a deal at the OPEC meeting took markets further down south. It's essentially a fight going on between Russia and Saudi Arabia, with Russia refusing to play ball on dropping crude production. It's seeming, on the other hand, that coronavirus is also going to impact the demand for crude as the economy seems like it will slow down. So we have all these global factors, but we have concerns of our own as well. And one of them is, of course, Yes Bank and the mess with Yes Bank, concerns about what's going to happen in the banking sector and in the financial markets overall. So we've seen all of that happening through the day. We've seen US markets react poorly right now, but we've also seen many claim that a drop in crude price is going to be good for certain economies, whether it's the US or even India. So let's get a clear picture, because there are a lot of worried people out there today. Whether you're investors in markets or not, whether you're investors and putting money in deposits, people are worried, and generally people are worried about the coronavirus. So let's try and assuage some fears and get a clear picture of what's going on in the world right now. Helping me do that this evening on this very special edition of the India Development Debate is Ajay Bery, analyst South Asia with the Eurasia Group; Jameel Ahmad, the Global Head, Currency, Strategy and Market Research, Forex Time UK; and of course A Balasubramanian, CEO, Aditya Birla Sun Life AMC. Welcome to all of you, and thank you so much for speaking with us. Okay, let me get your sense right now what we're seeing, especially as markets, have shown how vulnerable they can be. It's continuing in the US markets right now. We saw it in the Indian markets earlier today. Do you see this as mostly crude fears and the fears of this fight taking over corona fears?
Sure. Well, first off, thanks so much for having me on today. So what we're seeing is kind of a broad-based response to multiple crises all at once. So it wasn't just one issue happening. So first you had the coronavirus fears. Then you had the crude oil dispute between Saudi Arabia and Russia, and now the further escalation of a price war between the two countries. So kind of you've got these two big, broader issues, and followed by policy missteps, which are really roiling markets. And so we've seen the circuit breaker be hit in the US with trading suspended for 15 minutes, amidst concerns that while, yes, a drop in crude oil prices may be good for certain economies, but at the same time, given the coronavirus fears, the demand that would normally be associated with an oil price shock may not emerge.
So that's the key problem at the end of it, isn't it? If I had to find something to connect all three, it would be a fear of a drop in demand, a global slowdown, so to speak. And Mr. Balasubramanian, let me come to you on that, because I want your perspective on what we've seen in the Indian markets. Of course, we have our own issues, but we're so connected to what's happening in the world right now. Did you see what was happening in Dalal Street today as more of a reaction to the Yes Bank mess? I think corona is a little behind us, or is it worries about crude and demand overall?
I think if you look at India, it's been in a uniquely positioned. Yeah, we had our own crisis that we have to deal with for the last almost 6 to 9 months period. One is the domestic slowdown was one of the reasons that we saw Indian markets were a bit on the edge. And of course, Yes Bank was an issue last year when they announced for a moratorium. The entire financial space, which has been doing pretty well, had to take some kind of beating. and create some kind of uncertainty. Of course, it also kills the uncertainty because one, you keep it hanging for too long, or find a solution which the government of India did a very good job of finding a solution. I know, I think they are fixing the solution as well, probably next few weeks, next few days.
We're waiting for the
issues.
solution.
Exactly.
We have the beginning of a direction to where the solution could be.
Exactly. Of course, I think it seems to be falling in place.
Yeah.
But having said that, but nobody expected the crude prices to drop in such a manner in the last few days. That did have its own impact on India, mainly from the global investors looking at the reducing the exposure to the emerging market, and India being one of the largest recipients of money coming from overseas investors in the form of ETF, and we could see that kind of pressures. But the falling of crude oil prices definitely has an impact on the refinery margins, and the input cost for some of the things benefits. It, of course, some doesn't benefit. Therefore, the market actually has reacted very quickly on the basis of this yesterday's fall in the UAE market. And of course, looking at Dow Jones, which I think the earlier speaker mentioned about, the Dow Jones hit the lower circuit. It was reflecting the future, therefore India got impacted. But having said that, from Indian market point of view, when oil price being at $30, let us assuming that is going to stay for at this current level about $30 to $40 for a longer period of time, naturally it of course benefits India being one of the largest importer of oil. It'll have some kind of positive rub-off impact on currency, on the balance of payment,
Yeah,
as well as on interest rates.
I'm going to come to that. I'm
Yeah.
going to come to that. Does India benefit from low crude? Because that theory is doing the rounds today, and we'll come to that in just a bit. But Jameel, I first want to get your take on what we've really been seeing with crude and its long-standing impact, its outlook. Is this really the fear of a long battle between two very powerful men on both sides, Putin on one side and MBS on the other? Because that's where it's all started out from, right?
Thank you so much. I look at it from this perspective. Global investment sentiment was already looking last week and over the past couple of weeks like a sinking ship. Now, what this powerful battle between two very, very extremely powerful leaders, powerful countries has done is push that ship overboard, which is why we've seen so much great selling across global asset classes today. Oil spectacular, but across all global markets you've seen this, whether it's risk assets in emerging markets, whether you're in Africa, Eastern Europe, Asia, you've seen the same level of selling. But at the same point, you've seen that safe haven demand for the yen, for gold, for the Swiss franc. So it's pretty clear to me that this is a flight to safety for investors. I do believe that oil prices will stay lower for longer, and for good reason. This can help the global economy at a time where there is a huge amount of virus fears, and nobody's got a crystal ball right now to say for how long this virus is going to be in play for. And in fact, the crystal balls are very cloudy, they're very misty, because all we do see instead is this virus getting stronger and stronger. From that standpoint, lower oil prices are better. And if there is any good news, a shining light, having the spectacular drop in the oil price today and such a sudden drop in world stock markets, it should help markets find a bottom, because right now they're pricing so much bad news, and this should help at least balance things out over the course of the trading week.
Well, is it balancing things out? Akhil, talk to me about crude and the Indian context as well, because, like A Bala just said, it's should be good news for us technically. We import most of our crude. If it's going cheaper, we should be cheering.
Yeah, absolutely. I mean, so India imports about 86% of all of its crude oil, and it's been said that for every dollar that crude oil drops, India saves $1 billion. So right now, India's oil import bill is estimated to be at about $105 billion for this upcoming fiscal year. That price was estimated at about $64 per barrel. So of course, this will help India in terms of its fiscal deficit at a time when government revenues are extraordinarily strained. This should help India at least try to meet its fiscal deficit challenges. The question, though, is will the demand increase? For example, here in the U.S., what we're seeing is we're seeing a drop in crude prices. Yes, that would normally mean consumers go out, they'd fill up the tank, go on vacation. But more broadly, the coronavirus fears means that people are staying home and people are saving, are taking more time to save money because they fear a possible recession. So while this could be a good news for India, it really needs to be seen if this leads to an increase in consumer demand.
Well, consumer demand is at the key of it, isn't it? And Jameel, I want you to come in on this point as well. In India and in other economies, what does lowering crude mean? And it's something which could continue as coronavirus fears more than anything else, and that panic impacts various markets and businesses across the economy.
Yeah, so if I looked at three economies out there who can benefit from lower oil prices and lower commodity prices as a whole, it's India, Turkey, and China. Now, each of these economies have had their own currency problems within the past year and a half or so. The Chinese yuan, we all know famously, broke 7 across the US dollar last year. The Indian rupee, which has now returned back to record lows against the US dollar. And everybody knows about the Turkish lira currency crisis of 2018, which even today it's still not fully recovered from. So hopefully the lower oil prices will help foreign account deficits, and it will help improve consumer sentiment because of lower oil prices generally. But having said that, if you're in a market like the UK and Europe, which also benefits from lower oil prices, most of the petrol pumps, most of the value that you pay is actually through taxes. So how much this really seeps into the consumer on a world level, it's going to take a great demand to study. Generally speaking, lower crude prices are good, but how good they can really be at a time where everybody wants to stay home, where, as the guest correctly said, and at a time where you've got this huge fear factor over a virus, which is getting stronger, stronger, and stronger, this also offsets the positives from lower crude prices today.
You know, is the virus really getting stronger and stronger, or is it fears about the virus getting stronger and stronger? What really are we saying at this point? Bala, how are you looking at, the coronavirus fear pan out? Because of all the factors that we've talked about in our 3 C's, I think that's the most unpredictable. There's a paucity of information. We don't know how far it will go. And human reaction is to save oneself, be safe, panic and fear.
Yeah. I think interestingly, I think there are many statistics going around that death due to the road accident versus the coronavirus is actually literally a small number, but the fear factor is pretty large. I think mainly because of it can spread very fast.
I want to say something on that, if you allow me. A lot of people are doing this death due to X versus Y.
Correct.
But no one is really standing on the road in the middle of traffic, waiting to be hit in a road accident.
Yeah, true. Of course.
Coronavirus, the fear is that you don't know how you may be vulnerable.
See, today I think one is the fear factor. I think everybody is in a preventive mode. Every nation is in a preventive mode. And then third, of course, even if you are detected that you are affected with the coronavirus, then you have the fear of you will get locked in quarantine for about 2 weeks or 3 weeks or 4 weeks. One doesn't know. So therefore, that fear factor, of course, is playing its own role. But if you look at the way I think China has handled the whole stuff is pretty good. Now they have contained quite a lot. The incremental number of cases are falling. And the same thing goes actually to most of the nation. Of course, India is just caught on with this a little late. And we are just ahead of the summer season beginning for India. There is a high probability that as the heat situation improves, that comes on one side.
I've actually asked the chief scientist of the World Health Organization if that's going to help. And she told me there is no proof to show, no data to show that the summer is going to help. So I hope that's true, but we don't know.
Yeah, of course, yes, one doesn't know. And I think the country which, of course, it's also getting quarantined is countries like Italy. Yeah. They have taken many steps, but still there is a lack of facility to treat people and so on and so forth. This has led to its own demand growth slowing down. I think if you look at the numbers, like airline traffic, we just saw some numbers like airline traffic globally has come down.
I'm sure.
If you take actually the room occupation rates in hotel industries has come down quite significantly. And even the restaurants, the walk-in customers would have been quite high, and globally I'm saying it's quite come down. But India, despite all the issues that we are talking about, wherever I've been traveling, not so much of fear is there. At the same time, people are still fearful that India, if it gets affected, then what could happen? But that's something one doesn't know. I think one has to see it. But I think historically, if you see, I think these things do not last for too long. I think what this time the difference is, because the quarantine has been the biggest concern. It has impacted the movement of public at large in the public places, and therefore it is leading to some kind of slowdown. And again, that's actually changed the whole supply-demand factor quite significantly. across the different parts of the business.
I think what it has also done is highlighted to us like never before how interconnected we all are across the globe and how impacted everyone is. Whether it's through supply chain disruptions or not. So let me come to the big question. And this is something now that is being predicted. People are tracking this and, we must come and ask this. Are we looking potentially at a global recession? Where are we on that journey? Can this now be avoided? Let me start with Jameel on that question. It's a big one. No one wants to say it so far, but I think it's time we start talking about the possibility of a situation like this and what it would really mean.
The risks are growing every day. And to come back to your last question, yes, this virus is getting stronger because more countries are announcing their own cases. Yeah. And this is how the whole thing erupts in the first place, by a country having its first case, and all of a sudden it can get out of control very quickly. And think of it from this perspective. There's greater risks of a global market recession in terms of a bear market and falls above 30% in stock markets. There's a risk of that that's greater today than a world recession. But I want to use a heroes and villain analogy here. Think of the virus as a villain. We're in an Avengers movie, we're in Marvel or something, and what we have is the villain's getting stronger in terms of his own army is spreading into different nations, and that virus is then getting bigger and bigger. At this point, we don't have enough heroes in terms of good news to stop the villain. So what we do see then is if the good news doesn't start coming through, either through the virus being controlled or there being a cure, and of course, many European nations can't quarantine to the degree of what China did over the past couple of months. It's not possible. It's such an open economy, you can't do that. Now, that is what would lead a global recession in terms of this virus is not something you can control. Even with measures being put in place, you can't stop people going from A to B. Some people will not accept this. And as the months pass, if this does not get fixed by April, May, then yes, by the end of the year, we could really be facing a global recession.
Wow. It's, I love that comparison you've drawn, Jameel, in an Avengers movie. I don't know which edition of it, part 1, part 2, but part 3. But you've set a deadline. You've set a deadline that things have to look up by May. And, coronavirus receding is factor number 1. Akhil, you want to weigh in on that? Are we potentially staring at a global recession?
So one of Eurasia Group's top risks this year was the great decoupling, the disentanglement of the US and Chinese supply chains. I think what we're going to see here is a speeding up of that process as kind of the world realizes how exposed it is to China and how much of an impact a situation like coronavirus has on the ability for companies to function. I think in India more broadly, we see the effect in the pharmaceutical industry, the automobile industry, even the tourism industry. So these are all challenging situations. And so, of course, like as the coronavirus situation continues to spiral, as more fears about travel, about the ability of companies to access products in their supply chain, consumers staying home, this does have the signs of recession. But of course, there are other factors at play.
What the slight silver lining I'm looking at is that people have stopped talking about India's slowdown because in comparison, other problems now seem so much huger.
And I think the reason is also especially the last 6 months, Indian government has been doing a few things to get the economy back on track. And they have been taking multiple steps, right from tax cuts and so on and so forth.
We have to wait and see if it's working.
We have to wait and see. Even the recent last week in the form of cleaning up the financial systems and finding a resolution for S-Bank is something which again in those directions. And having said that, I think one of the things that I think earlier question you talked about the global recessions, something which is not still seen that credit market globally is pretty big. Even US is $1 trillion, US about $3 or $4 trillion market in the junk bond market. And the way I think the oil prices dropped, the way the commodity prices dropped, there is a high probability that you will see the credit spreads beginning to widen. And if that happens, and despite the liquidity being good, and the central bankers may actually choose to cut the rates further and boost the sentiment, and the demand destruction that has happened thanks to the coronavirus probably can lead to not just a recession, it can also actually credit blowing out could happen. So I think one has to just look at all such indicators as to how these things will play
So
out
what's
as
the
we move
silver
forward.
lining for us? What's the silver lining for the Indian economy? You spoke a little while about crude prices falling, but I want to remind you that we had a similar situation 5 to 6 years ago.
Yes.
And it didn't really trickle down either to people at a retail level, so where their consumption would go up,
Correct.
or it would help their pockets. The government did have a nice little bounty, but it's not really seen us through so far. So what do you expect to happen this time round?
I think the silver lining, of course, naturally the benefit of oil cannot be underestimated from India point of view, because we are the large consumer of oil. The benefit that can accrue, not just only on the current account deficit as well as on fiscal deficit, the benefit that can accrue to the consumer at large, I think is leaving a lot of money on the hands of people because their expenditures on crude oil prices go down.
But it has to be passed on.
Of course, it has to be passed on. I'm sure with the pass-through mechanism the government of India has kept, some of course they will give it to consumers, some of course they will keep it for themselves, some they will give it for the oil marketing companies and so on and so forth. I think could be made as a win-win situation for everybody. That's one. Second is the government of India has put a few of those companies for strategic sale. And these strategic sales, of course, will happen this year, especially BP, HPCL.
In this market, are you as optimistic looking at the situation of the market
only the
right now?
best way the global oil producing companies can create a hedge for themselves, not by not investing somewhere else. I think by investing somewhere else, they create a hedge for themselves, whether it is Aramco or Rosneft. By investing in India and the BPCL is actually giving access to the large market, you're creating a hedge for yourself. Therefore, the likelihood of getting a better price for BPCL, I think would be a lot better through the strategic sales. That's one. And third, of course, we are just coming out of the harvest season. This year, thanks to the good monsoon, the rural economy is just beginning to pick up. And because of good harvest season, so that will also lead to some bit of money in the hands of people at the rural economy. That we can give some kind of kickstart. The last, of course, not the least, the government of India is just not stopping actually in terms of the structural reforms. They are even looking at the reforms around the automobile sectors. Just looking at deeply in terms of what could drive the demand back in the automobile sectors. Is it the introduction of EV or stopping the introduction of EV? It's not that. It's about more for creating some kind of scrapping policy. They have been debating for quite some time.
Yeah.
That they come out with the scrapping policy as quickly as possible and give some kind of boost actually for the consumers with interest rates coming down. It can actually act as a silver lining for India.
Well, it's a silver lining that we are hoping to see.
Of course,
so
the
far.
very fact that the government of India has been reacting with reasonably good speed,
Yes.
I would assume that government will take few steps, because a great godsend opportunity, I would say, with the oil price dropping, it's a great godsend opportunity for India to quickly come back on not faster growth, but at least come back on track and beginning to actually
let me just get Jameel on that. Jameel, what do you think we need to do to make sure we make the most of this crude bonanza?
I think the benefit would actually come through corporations investing, because you correctly put it, the average person on the street generally does not see the lower oil prices. But for a corporation that's importing a huge amount of a commodity, there can be a benefit there. So hopefully that corporation hypothetically then invests in recruiting new staff, training staff and so on, and it helps the consumer from that perspective. Generally speaking, elsewhere, what could help India, and I know this will be a controversial thing to say, is another drop in interest rates. Because if you look at where global central bank policy is heading, there is a coordinated move where it might not all be the same day or the same week. All central banks are hinting at another major move of monetary easing, which in short means lower interest rates. So to be more competitive on that field, lower interest rates is something that can be considered if, as your guest says, that the economy wants to rebuild growth on a gradual basis. This could also help India in this current circumstance, because nobody has a crystal ball. Nobody can see until the data really comes through what impact this virus will have in India, the same way you can't say about Singapore or another South Asian country. But what we can see is the Chinese data already has been terrible, and this virus is no longer a Chinese problem. It's a problem for many, many countries across the world. It has only just entered Europe and the United States over the past 2 weeks.
Yeah.
So this domino impact is going to be felt through for the next couple of months at least. You've only seen China so far. More's to come.
Absolutely. We'll have to wait and see where this actually goes. Are we going to head towards a global recession? Are we going to see a silver lining, at least in the Indian context? These are all questions where no one has a crystal ball, but everyone can make educated guesses and estimates. I want to thank all of you for joining us on the show. I'm going to take a very short break. On the other side, we're talking Yes Bank. I will be speaking with Prashant Kumar, the man in charge of turning around Yes Bank. We'll also talk about how likely a revival is in the beleaguered bank. But before I go into the break, I just want to play out for you a slice of this conversation with a big name from the market, Prashant Jain, from earlier today, and his view on where the markets are heading.
Jain joins us to walk us through his analysis of the way forward. Fantastic to have you back, and thank you for joining us. We've got you at a very, very important turning point. The smile on your face is telling me that you think this is a buying opportunity. You're not that scared with the fall. Why is that?
I think over the weekend, several things have improved for India. And it's a good coincidence that all of it happened in a matter of days. One, the BPCL EOI has come, and I think that represents a very strategic shift from divestment through ETFs or OFS. Crude prices have come down, which is always good for India. They may bounce back, but I think for the time being, for foreseeable future, they should remain low. Global yields have moved lower because of coronavirus. I think this fall in crude will also help that to some extent. And I think India at this point of time can do with lower interest rates. It will help in reviving economic growth.